Shari. Hello everyone, thanks very much for the opportunity, Suji. It's really exciting to be down here again. I haven't been out to this area for a little while, although I've been to Parramatta and Blacktown many times. All of those people eating their last sandwiches, do you want to bring them over and sit down? Because you're going to miss an excellent panel of speakers. Well, I'll get started. I've got a short presentation, and as we've only got 3 to 5 minutes each, this will just be a really quick snapshot. But of course, we're all available for questions after, and also in your packs, you've got our slides. In mine particularly, I've included extra slides that are pretty self-explanatory, so I won't really have time today. But if you've got a question later or after the session, just give us a call. So now we're going to talk about financing social enterprise. It's a bit of a rough session to be speaking after lunch when everyone's a bit full of food and tired from the morning episode. But we've heard a lot of stories this morning, and they've been amazing stories. I've had a few tears in my eyes in terms of what's driven people to develop a social enterprise or pursue their enterprising idea. Now we're going to talk about how to finance that, and we've got a selection of speakers, from crowdfunders to Forresters who provide debt finance. I'd like to just, this is our little disclaimer, this is not, what I'm about to present is not advice at all. You have to show that. Next slide, please. I'm just going to tell you a really quick story about one of the organisations that we have.
Shari, if you can hold the mic a little bit closer, they can't hear us.
Is that a bit better? That's better? Sorry about that. I'll just tell you a quick story about an organisation that we have recently funded with a loan. So this is an organisation, Better Life Communications, who started out of recognising a need within their community to provide affordable mobile phones to people who are on, say, Centrelink benefits or disability pension. They prototyped the idea in conjunction with RecLink, and then approached us once they'd had a short track record for a loan of $52,000 to get them started and to formalise the arrangement. They originally prototyped, as I say, using RecLink as sort of the distribution point. They had their own team. They didn't have their own legal structure at that time, but they did set that up once they went out on their own. They provide mobile phones, as I said, affordable access to mobile phones, which is so important. If you can't be accessed, if people can't call you, whether that be your family, your friends, support networks, Centrelink, etc., you can't actually benefit from all the community has to offer. The mobile plans that they offer, that the Better Life Communications offer, are they're not contracted for say 2 years. You do enter into a contract of sorts, but you can exit that contract, and it's a relatively cheap plan for basically local calls and mobile calls. What I wanted to talk about in terms of capital, many of the previous speakers have talked about how to start up and what's required. Certainly with Better Life Communications, a lot of sweat equity, a lot of in-kind support from their partners and supporters. The founder contributed his own money to this initial enterprise, and then they grew to the point where they needed to access some longer-term finance, and that happened to be from Forresters. We could see that the business model could work. We could see that the prototyping had demonstrated that there was really a demand for this product, and they have exceeded their expectations in terms of the number of plans that they have now sold. So it certainly grew out of a need from the community and has been a really good success story in terms of where it's ended up, and it's obviously still growing. 2 minutes. Next slide, please. This is probably where I'll spend most of the time, because it's what we're talking about now, understanding your capital needs at the different stages of your enterprise's growth. Initially, you'll need startup capital, and that may come in the form of crowdfunding, grants, philanthropic donations, your own equity, family and friends that are supporting you. But at some point you'll grow out of that phase and you'll need the next level of capital, which we call the development phase. That's when you want to start investing in some assets. It might be computers or a website, and you need some capital that will support you in those needs. Again, it could come from some portion of grants, it could be philanthropic, it could be debt finance. For instance, Forresters have an early stage or emerging social enterprise fund, which is specifically for startups, and crowdfunding. We've seen a number of the organisations that we have provided a loan to who have used a combination of all of those sources of capital to achieve their aims during that development phase. And then finally, there's the growth phase. So that's when you're established, you've proven that your enterprise works, you've proven that there's a demand, and now you want to grow it. You want to take it into more areas, you want to support a bigger community. You'll need a different type of capital in that phase, and that can come in the form of equity or debt. If I go to the next slide. We see in our work every day, and we talk to so many different enterprises from all different sectors and serving all different parts of the community across Australia, that social enterprises, like any business, need access to capital. As I've briefly described, that comes in many different forms, and each has its own role in the different phases of the life cycle of an enterprise. I'll quickly skip to the next slide. In terms of accessing capital, we work with organisations and we work with them, taking them on the journey of how to access capital. We want to be on that journey with the enterprises. We see that in our work, the three key pillars that we find are most essential to accessing capital, whether it be a loan from, say, Forresters or SEFA or others, or philanthropic, or getting your community to support you through donations, is having a really clear purpose and being able to describe that, and also having experience. So that usually an enterprise has one or two individuals that are the driving force, but they will need more. They'll need a variety of experience surrounding them, whether that come in the form of an informal advisory group or a more formal structure. Business planning sounds basic, but it's essential. You need to do your homework. You need to do that from a strategic and a business planning perspective. You need to also do it from a financial perspective. And then finally, the decision-making and leadership. Again, it might sound pretty logical, but so often that's where the enterprises get stuck. Who is in charge of making those decisions, or how are those decisions made? A cooperative has a very different structure to, say, a sole proprietor, or a PTY Ltd, which could also be a social enterprise. Just being clear about those things really gives you that ability to access capital. So I am going to run out of time. So there's one final slide here. I won't go into the detail, but it's basically saying that if your social mission or purpose sits in the centre, you then have the products, programs, services, whatever you're selling, whatever your trade element is. Around the outside are all the other elements that you need to consider and invest in as part of the startup of your social enterprise. Of course, you won't have a lot of money necessarily to do that initially, but as you develop and grow, they're the types of things that you'll need to consider. So in your slide pack, there are a few more examples. And just to finish off, tips from our point of view, because we work with so many different types of social enterprises from all different sectors, I'd say really start with the big picture and the vision, but break it down. You've heard from others that it's hard work, it's a challenge, but start with that sort of 5-year outlook and then break it down into smaller, more manageable pieces. Don't take shortcuts in your setup. If you want a particular type of enterprise, set it up correctly from the start, and that includes your financial systems, how you're going to account for things on a daily basis, right through to who it is that you actually get to work with you, whether that be volunteers or paid people, and invest in expertise. Invest in your enterprise, and that might mean expertise in accounting or finance, or it might equally mean putting the money into developing an appropriate website for your service or product. I'm going to hand over now to Nick. There's a couple more slides in my pack, but that's just really about who Forresters is, which I'll let you read at your leisure. And I'll hand over to Nick from SBA.
Thanks, Shari, and great to see so many of you here today, and I know how precious your time is. So I'll make sure that I just build on from what Shari said rather than go over it again. Like a lot of you here, I actually come from both the asking side of the equation and also the giving equation. So you can very much relate to a lot of you here with all of your questions about how to access capital. I am the founding director of an organisation called the Manjuri School Project, and we run 4 social enterprises in Uganda whilst running a 300 pupil primary school. But specifically why I'm here today is because I'm talking about how to access capital here in Australia, and from that perspective I work at Social Ventures Australia as an analyst. So here to tell you a little bit more about SVA, what we do, similar to Forresters and SEFA, but a little bit different. We provide finance to social enterprises, amongst other things that SVA does. So Social Ventures Australia, we're a not-for-profit ourselves. We've been around for over 12 years, and we were founded by some of the largest not-for-profits in Australia. Amongst several things that we do, we're trying to drive capital into the social sector, driving expertise into the sector, and really building on an evidence base. 2 themes that we particularly try and focus on is employment and education. And so to that end, the social enterprises that we typically fund have, I suppose, serviced those themes in one way or another. Whilst we try not to limit the social enterprises that we fund, they in some way or another help people in that way. So we try and partner with innovative social entrepreneurs and enterprises that are essentially creating opportunities for disadvantaged Australians. So just so you know, SVA, we have our primary vehicle for providing funding to social enterprises is through the SVA Social Impact Fund. That's an approximately $9 million worth of a fund that we deploy to social enterprises, which are either for-profit or not-for-profit. Just so you're aware of how an organisation like us process an application for funding. We provide both debt and equity investments, usually from $100,000 to $1.25 million. So a little bit more of the enterprises that we typically invest in are more developed, slightly more mature, and are really seeking capital to grow and expand and scale up their social impact. So here you can see the process that we go through. So we typically get a lot of applications sitting up at the top, and we do the initial vetting phase. But because of many reasons, the number of social enterprises that we take to the next level of due diligence is significantly less, and then when we take it further down the chain, they become less and less. So SVA, we've now approved 9 investments over the last 24, 30 months, and we're always looking for more great opportunities and people that are creating great social impact in the community. A few things to note about why the pipeline shrinks so quickly at that early stage, just so you guys have an understanding of when you get to that stage of applying for capital, what are the things that we particularly look for? Like Shari said, we want to see some good governance, we want to see good management. Often we see organisations that might not have the management structures in place that gives us confidence as financiers that the organisation is going to be run well. That's one of the first things that we like to look at. people often say that you invest in people, not necessarily the organisation. Secondly, we typically need to see some sort of source of revenue. So there are so many fantastic ideas out there from our perspective, and with our fund we have a limited mandate that we need to follow. We need to see some sort of source of revenue because that will essentially mean that the loan, or if it's equity, that the loan can be serviced and it decreases our risk. From our perspective as financiers, we are very cautious about the risks of investing. Don't take it personally. We're not investing our own money. We're investing some of the government's money and also private investors' money. And no one likes losing money, so from our perspective, we need to be risk adverse. So things like good management are a really good indicator of a good investment opportunity. Reliable, or at least established sources of revenue, or revenue streams. And typically also, most of our investments, we need some sort of security. That's also part of our risk aversion strategy. So whilst a lot of early social enterprises might not have property, real estate or property to back their loans, there are alternatives. For instance, guarantees or personal guarantees by directors, or there's a couple other ways that you can sort of provide us the certainty that it's not going to go belly up. Just so you know a few of the familiar faces at SPA, this is largely our social impact fund team, and we hail from a variety of backgrounds. But we're all very passionate about seeing the growth of social enterprise here in Sydney in particular, but all across Australia. So I suppose for what it's worth, my unsolicited advice is you've had a fantastic day hearing a lot of stories, and Shari really did nail it in terms of the stages that you go through. But I think it's important to remember that it's not hard, and if it was worth it, it wouldn't be easy. So whilst you go through your social enterprise development phase, take comfort that a lot of people find it difficult and there's no easy way. But please do get in touch with us or any of the other guys. I mean, you're going to hear about a variety of different funds and avenues of capital today. But please do get in touch. We're always happy to have a chat and field some of your questions as you go through the process. So, thanks.
Thank you for that. So we've got a sort of a really good bit of information in a nutshell. Thank you both Shari and Nick. That we're off to a great start. So moving on, I'm going to hand over to Hannah from SEFA. SEFA is an organisation a little bit similar to Forresters as well as SVA, but Hannah will tell you a little bit more about what they look for when they get your applications for funding.
Yeah, thank you. We might be a little bit same, but hopefully a little bit different as well. So I'll try to focus on where SEFA fits into the accessing capital for social enterprises landscape, and then how we particularly try to work in the early stage investment space, which is, as Shari and Nick have pointed out, a little bit more difficult to kind of tackle in terms of making sure that there's a balance of capital needs, but then also kind of risk appetite from the funder's perspective. So I think Mark already pointed out earlier this morning, obviously there are different social enterprises, and as you will see from this table, SEFA has invested in all kinds of social enterprises. So that could be an organisation that's clearly working with, generating employment for people at the core of its business, but we also really support a lot of organisations that actually provide a product or service to the wider community, or even to a smaller group of disadvantaged people. And we've also supported an organisation that is purely focused on generating profits to then funnel those profits back into the community for the greater benefit. And I think actually this kind of spectrum, as I call it, it's quite busy, I know, for kind of to capture it all, but I really encourage you to go to the School of Social Entrepreneurs website and have a look. It's part of their new fund launch to really work in the early stage development space. It kind of really outlines how your organization will develop from pure startup on the left-hand side all the way to development phase and then to the very mature phase, basically where you establish business, you would be able to access mainstream capital. And along this spectrum, along this chart, you will find, capital will only be one of the resources that you need to actually make your venture work. There's, a lot of, in terms of capacity building, having the right people and the right network around for building partnerships. But clearly, today I really want to focus on accessing that very much needed capital to get your venture off the ground. So just very quickly about SEFA. We are actually a social enterprise ourselves and also fairly young. 3 years in, we might have kind of overcome the teething phase, but, we are still kind of learning in terms of how we can actually, in the end, service the wider ecosystem of social enterprises in Australia in the best way possible. So we are a specialised lender, very clear. We only provide loans. We don't provide free money. We don't take kind of equity or ownership stake in a business. We are basically providing loans to organisations that do have a social mission, working specifically also with Indigenous communities or having a focus on the environment. We are very kind of broad in terms of how we define social impact. We just say, in general, it has to, benefit the wider community, but clearly said, it's capital on commercial terms. So our social lending approach is really, I think, how Shari has already quickly mentioned it, in kind of these, what I call buckets, although I don't really like to kind of, put it into specific pillars, but clearly, you've got the capacity loans for the very early stage ventures, kind of as things are growing, starting to grow. And then, we've got a much larger allocation towards like enterprise growth when, you've got an operation track record, you've proven your business model, and then obviously, at some point you might look to actually buy assets when you've got security and can access much larger amounts of funding. So I would really like to focus on how we can tackle the capacity loan part, like smaller amounts, I'd say, around maybe 50,000, and how we can make that work, kind of, having the commercial debt approach, but then also bringing, what I call kind of innovative mitigants to the table. I think really my kind of, approach to kind of making this little vulnerable plan into something a little bit more sturdy in terms of, building a tree that's kind of supported by really risk mitigants could be clearly having a strong team, not necessarily having that key person risk in terms of building a network of capable people, having maybe an advisory board of experts who can introduce you to important people in the industry that might also help to build your business, and then clearly having the wider support of the community. If things really turn bad, can you count on people, putting in voluntary hours for free, and people who are really kind of there when the rainy days are there. That's what we call kind of social resilience, and we think that's really one of the main kind of success factor that makes a social enterprise stand out compared to more traditional business. Then clearly, if you can use a little amount of seed funding to establish a pilot and actually test your model and kind of learn from it and see, is there anything that I have to change? Like, is the vision that I've set out to deliver, is it really working? And is there anything that I can change that's actually going to make it easier for me going forward? I think that's also really important. And then clearly, even though you might have not delivered on it yet, but if you can convince people that you've got a product or service that's really adding value, and if you can secure contracts or have strong letters of support that indicate that you will be having revenue streams in the future, that of course gives some comfort to the lender, being responsible, that there's that the level of debt you're taking on is not too much. I think another really, really interesting concept is to look into crowdfunding and see how that crowdfunding can actually work for you. So for example, certain enterprises, if you launch their product or service as a reward, as part of the crowdfunding campaign. So it's almost like a pre-sale or market test if you've got a product that's sellable by the internet or can be picked up. Because it's not necessarily only showing support kind of in terms of clearly it's a donation, but I think it's also a very strong indicator. Is there, demand for your product? Are people kind of, out there say like, yeah, this is a really good idea, I want to support it. And then clearly that kind of market appetite testing gives again some idea of like, what would financial returns, income, what would that look like in the future? And then clearly in terms of equity, I mean, sometimes there's limited opportunities for certain legal structures to take on equity. So, that's, with a caution there. But clearly, it's kind of sweat equity as well, kind of the amount of time or sacrifice that certain people make to the project shows some commitment that, again, what we would consider social resilience. And really kind of, coming to kind of one of my last slides here is really how to prepare when you want to access finance. I think Shari already mentioned clearly you need to have a business plan. If you have some historic financials, and I'm not necessarily talking about audited financial statements, but if you've had a test run and said like, look, actually we had a pop-up store, we've done it so many weekends, we were able to track sales, we, have seen a change in sales, all of these little things that you are able to document and showcase in terms of this is what I've achieved and this is how we've been progressing. I think that's really something that can add good value. And then another thing, of course, is projections. Don't try to, be overconfident, and don't try to kind of underestimate what you can achieve. Kind of realistic planning in terms of where would you like to be maybe in 12 months. I think it's something that's really adding value in terms of the overall package. And clearly something that we're always looking for is kind of worst case scenario. And I'm not talking kind of Armageddon when, everything blows up, but it's more in terms of at which point do you have certain fixed costs that, need to be covered, like minimum turnover, what we would call in kind of financial language, cash break-even point. All of these trigger points, give you a better idea of like how you have to budget and certain milestones that you have to achieve on your journey. And then last but not least, I'd like to leave you with what I would call, an apple a day. As the doctor always says, there's an apple a day also for social enterprise. You might start out with a very, spunky looking red apple, but then, there are always certain holes in terms of you've got capital constraints, you might not have the right capabilities, you need to, access lawyers, and everything gets kind of mashed up, but hopefully at the end, with the support of many people around you, you will be able to kind of, to sell that vision, what you had of the, full red apple. Thank you.
Thank you, Hannah. That was very informative. I hope this has given you a fairly good idea of what you need to do to access finance. How many people have heard of crowdfunding? Right, okay. Has anyone here tried it? No, okay, all right. Okay. Well, on that note, Erin, I'd like to invite you to talk about crowdfunding.
I'm sorry, Erin from Starts and Good. Yes.
Thank you, Sati. So you took one of my questions. I was going to ask everybody who'd heard of crowdfunding. So as she said, my name's Erin, and I'm here from Start Some Good. We are a crowdfunding platform that is focused on social enterprise and focused on anything that's going to do good, which is what kind of sets us apart from the other crowdfunding platforms. As Hannah mentioned, there are other ones like Kickstarter and Puzzle and Indiegogo that market a product, and that it's mostly a product. And in donating, you do get the product once it's finished. And that's an option with Start Some Good. That's an option with these your products as well. But there's a lot of other creative ways to go about it as well, which our venture support team is always happy to work with you on. So I'll go back to my presentation here. So in the past, socially-minded people actively participated in a few causes or organizations like Rotary, and they would either go to the meetings or at least get the newsletters. And go to the next one. So the barriers to entry in establishing your own social enterprise is a lot lower now, and we have a lot more people participating in this sort of thing. These people are called free agents. It's all of you, I believe. So we'll go on to the next one. Crowdfunding. describes the collective cooperation, attention, and trust by people who network and pool their money and other resources together to support efforts initiated by other people or organizations. It's kind of confuzzled, isn't it? Doesn't really mean much to me, even, and I know what crowdfunding is. So I'm going to go through and tell you a bit more about crowdfunding. Go to the next one. Actually, skip to the next one, we'll come back to that. Why would you do crowdfunding? First off, the process of crowdfunding is transparent. So it's something that you can put out there. The best way of crowdfunding is to tell people exactly what you're going to be doing with the money, exactly why you need it, and exactly how you're going to be using it. So if you have a cafe that you want to start, and you want to sell coffee from Papua New Guinea, you want to support a community in Papua New Guinea, or you want to support your local community, you might have local growers, or probably not local growers in Australia, but local roasters, or something like that. You are incredibly transparent about that, and people love it, and they're happy to donate to that. It's empowering. You can start right now. You can start tomorrow. You can start the next day. You can start next month. And that's something that is really exciting about crowdfunding, because even though there's heaps and heaps involved in it, and there's lots of energy and effort and sweat and blood that put into it, the same way with any part of a social enterprise, you can start at any time. And that's what differentiates it from the other ways of getting finance. You don't necessarily have to have a business plan that we support. I mean, we support you, but not necessarily that we approve, because that's up to you. You're using the money. You're not indebted necessarily, but responsible to the people who have donated to your campaign through crowdfunding. And it tends to work both ways. It works really well. Another way that's really fun is that it's like a game. On Start Some Good, we have two different goals. We have the tipping point goal, which we tend to tell people should be the minimum amount that you need to start your project, or the minimum amount that you need to get what you need to get done. So I was involved in a crowdfunding campaign 2 years ago with a drumming school. I'll tell you a bit more about it later. But we kind of figured out that what we needed, the minimum that we needed to get our stuff done was $15,000. So we made that our tipping point. What the tipping point is when you reach that, you know that you're going to get all of that money. Up until that point, there's absolutely no guarantee that you're going to keep that money. As soon as the campaign ends, if you haven't reached the tipping point, it all goes back to all of the people who have donated. And that's another thing that we kind of used when we told people is, if you don't make it, you get it back anyways. It's not really great. But yeah, so it's really fun. And people like to be on your side. If you're in a game, they want to be on your side. The people who love you, the people who support you, they want to see you win. And they want to see you succeed. So I think it's really fun. Another thing is it's a great way to raise awareness. It's not just about money. It's about your marketing. It's about raising, it's a great time to reach out to the media. It's a great time to reach out to your local community and tell them about what you're doing. It's a great opportunity to sell yourself, because you have a really strong impetus, and that's money. It's something that you strongly believe in. So we'll go to the next slide. Oh, I have a fun little extra one here. It's in your hands, and it is. It's absolutely in your hands. There are mitigating factors, obviously. There's always mitigating factors. But if you work really hard on the crowdfunding campaign and you do your best, most people do reach the tipping point. Most people who have done the work, they've done the preparation work, they've done the they've done the marketing, they've done everything that they can. They at least reach the tipping point. And that's really empowering. Move on to the next one. Why do we part with our money? These are the four, got another one, These are 4 different reasons that people part with their money. One is an expectation of future financial return, which we talked about, investing. Another one is a good or service we want, which is obviously covered in a lot of the other crowdfunding campaign platforms, like Possible, Kickstarter, and we also cover that as well. A future you hope to see, and that's obvious, isn't it, with all of you? We're all trying to create a future that we want to see, and if we have people who share that vision, then they're going to invest in your project. A friend or community we want to support, same thing. Social entrepreneurs are the best crowdfunders, natural crowdfunders, because we've always been telling people about what we're doing. We need community support, and we're supporting the community in kind. So they are often so happy to give back $5, $10, $15, $25. A lot of people often will say, I don't even need a reward. I'm just happy to donate to you. I'm just happy to help you because you're helping us. And it's really exciting. Next one. So the Rhythm Hut is the crowdfunding project that I was involved in 2 years ago with Start Some Good. This was our shop front. We had an amazing mural put on there. A friend of mine called Scoops. If anybody needs graphic art on their buildings, talk to me. I'll get you in touch. And all of a sudden, one day we got evicted. I was doing marketing for them, and came absolutely out of the blue. And what we were doing was drumming schools. We had a drumming school, and we were doing events. We had workshops. We did disability workshops with local groups. We did community groups. We really created a community space that allowed anybody to come in at any time, have a chat if they wanted to have a cup of tea, sit and play with the dog that lived there. And it was a really beautiful space, just a big warehouse. And I guess being a drumming school, it shouldn't have been too surprising that we got kicked out. But we were shocked because we'd been there for about 5 years actually. So we looked at all of our different options. We had no money and we had very little prospect. We found a building down the road that was an old bus depot. And we thought, okay, this is the only place. We don't want to move too far because we don't want to lose our customer base. So we decided we were going to move into this building, and we needed 15 grand to get it renovated up to the space that we could actually inhabit it, that the council would let us move into there, because it was just a horrible, dilapidated place. We moved to the next one. We created our video. We did our crowdfunding campaign. Long story short, in 3 weeks we raised $25,000, and it was beautiful. It was exceptionally hard and exceptionally rewarding, and we got any donations from $5 to gold coin donations to a $2,000 donation, and so it's not impossible. It's really fun and it's really hard, but it's worth it. So that's part of the renovations. You can see we had volunteers. Oh, and this is it now. We built the deck. We got lots of plants. It's still a work in progress, but that's the new building, and that's the new deck, the outside. So we'll just move on, and I'll tell you a little bit about Start Some Good. I know I'm done. Okay.
Just, can you finish in 1 minute?
1 minute. I think so. Yeah. We'll just go. Them all go. Start Some Good is focused entirely on social impact projects, like I said, and that's what sets us apart from the other crowdfunding platforms. We are international. We have team members all over the world, team members in the States, in the Philippines, in Cambodia, Australia. I think that's all at the moment, but we're constantly getting new people in, and we have the best support team for social impact projects. I can say that with confidence because all of us, well, I'm not one of the support members, but all of the people on the team have either been part of, or are part of, have started, or have been involved in these projects from the very beginning. Have done social enterprise themselves, so much experience. We had 2 team members this year who passed the 100 project mark. So they've both done 100 projects and helped 100 different social enterprises do crowdfunding campaigns. I talked a little bit about the tipping point model, so I don't need to go over that again. Our CEO was a social entrepreneur. Has anybody heard of Ashoka? Ashoka? Yeah. He was one of the members of Ashoka. He's done a lot of different social entrepreneurship work. He's a very passionate person about social entrepreneurship, and when any of us get a little bit unsure about what we're doing, or which doesn't happen very often, but he's just picks us up, and it's a great team, and it's very supportive. Keep going. Keep in touch. Oh, crowd match. Sorry, these little ones keep sneaking in. Crowd match I'll talk really quickly about because it's really important. Crowd match is a really cool initiative that we have going. We did it with Parramatta Council, and we do have a project going with the ING Direct, where projects can apply via our website to the Dream Starter program, and they set their tipping point, and if they meet it, ING Direct will match it. It's incredible, and they've funded over $200,000 into 2014. They've donated to different projects, and so applications will be up next in April. And keep in touch. We would like to talk to you. We love social entrepreneurs. We're always happy to have a chat. We do have a non-part crowdfunding course via our website, so you can sign up for that. We have a blog that you can follow, and we have webinars happening via Eventbrite at the end of the month. And you can always, my cards are over there, and you can always talk to our venture support team. Thank you.
Thank you, Erin. I know that was a bit long, but because crowdfunding is relatively a new topic, I thought I'd let that go. So, Erin, would you be happy for this presentation to be circulated to the... Okay, all right. So I hope everyone's got your email addresses on the radio shade. We're happy to send out the presentations that are not in your registration pack along to anyone who's interested. Okay, for our last but not least presenter, Garry Harris from Many Rivers. It's a microfinance institution, so that's another cool thing about Many Rivers. But Garry will tell you much more about that.
Thank you, Suji. I also have a PowerPoint that's over there and a video that is on the website, so I'm not even going to go there. I've actually decided to change and just go a little bit off the cuff. Many Rivers is a microfinance organisation, but we're actually a micro-enterprise development organisation. We actually help people start small businesses. That's what we do. So a lot of what you're trying to do is actually start a small business. And the commercial reality of that is the thing that's really important to us. We lend people money based on character, capacity and cash flow. One, if we're going to work with you, we know we're going to work with you for 5 years, so we want to make sure that the person is of character to the point that we feel like that relationship can last 5 years. Two, you've got to have the capacity to actually do the thing that you're going to do. You know, like microfinance is usually around a small amount of money for you to actually go and do something. It's not about employing 6 people and doing a whole lot of stuff. So it's a very small startup. And obviously, cash flow is important. If you can't pay for it, it's not going to happen. All right, so yesterday I had a guy ring me, runs an Indigenous choir in Western Sydney. The first question I asked him was, who's your customers? Because, you know, it doesn't matter how good your motivation is, and everybody's got a great motivation. If there's not a commercial reality around it, I'm not going to lend you money, because all I'm going to do is give you debt. All right, debt doesn't do anything for anybody. What I'm trying to do is give you the opportunity to generate something. So I'm looking for an opportunity where there's potential for you to actually do something sustainable, and about 30% of what I do is in the social enterprise space. I have about a third of my clients in Western Sydney are long-term unemployed, a third are refugee new migrants, and a third are Indigenous. So that's the space that we work in. So, and I guess one way for you to think through what you're doing is we're also a not-for-profit. We started 7 years ago with the pilot in Grafton, basically saying, can we actually lend people money in Australia to start a small business? We proved that you probably can because we do. All right. Then we said, well, it doesn't really matter if we start a business, is it sustainable? So we actually measure the thing over 5 years and say, okay, has this thing grown? Is there potential for this thing to work? And then lastly, we talk about thrive in business. But it's actually got to be, you know, something that's actually worth doing. So the thing that's really cool to us is that there's got to be a commercial reality. Like, we are philanthropically funded. People give us money to actually do the thing that we do. And usually it is big mining companies, They have a social objective where they need to actually do community engagement. They're not very good at it. We are, therefore they pay us to do it on their behalf. So there's a commercial reality around what we do. All right. We have some very large partners. We've got some of the biggest law firms in Australia work pro bono for us, do legal support, set up structures, do different things. Recently I had an Indigenous guy running a bistro in a pub in Tamworth. He was in there for 3 months, started to do really well. The licensee said, "This is great, I'll kick you out," and I put my son in there. It's amazing how nice a letter that comes across the bow from the biggest law firm in Australia saying, "We're representing this client, can you justify what you just did?" The lawyer doesn't actually have to do anything. The guy just changes his mind and goes away. So sometimes having that sort of support is more important than any finance that we can offer. Mission Australia are a major partner of ours. They do all our IT backup support. My car's a Mission Australia car, my phone is a Mission Australia phone. So the partnerships that you can have within your business help you to build sustainability into what you do. When we lend people money, we actually lend it through Westpac. There's a commercial reality there and that there's an interest. We currently have $3.5 million in loans out at the moment. That returns, if everybody pays their loan back, and about 90% of people do, we do take some risk because that's what we do. But that gives us $350,000. Our program this year will cost $9.2 million. So the interest is not about getting the money, it's actually to have a commercial reality into your business. If your business can't support commercial reality, we don't want to support it either. So the commercial reality of your business is important. And again, there's a commercial reality in there for Westpac because Westpac know that 10% of the people in Australia cannot access mainstream finance. So we introduce people who can't access mainstream finance into Westpac, so therefore their customer base grows. Hopefully after 2 years, they have got books which indicate that they've got something happening that's sustainable, and there's an asset. Before that, there was no asset, so they'd never get a loan. So as I said, my flyers are over there. The presentation I was going to show is there. Have a look at the Many Rivers website. There's a nice video there that really explains what we do. But like I said, my challenge is always the fair income test. When someone comes to engage, it's always like, okay, if you do that, I'll do this. So there's always a two-way street. I want to see the fact that, because if you're running a social enterprise, it's got to be commercial. I spoke to the guy who runs Wayside Chapel a couple of years ago, and he said, yeah, we're a not-for-profit, but we're also a not-for-loss. It's really important that there's a commercial reality around what you do, and it's sustainable. And if you think that's the case, I'm really happy to have a conversation. The first cup of coffee is always on me. People tell me, what do I do? And I think I've got the best job in Australia. Basically, I sit around and drink coffee and ask people questions. So I'd love to engage with any of you who want to engage around that. And like I said, a bit more detailed information is available. So thank you very much and all the best with your event.
Thank you very much. That was so informative. A big round of applause for the entire panel. I'm running late as usual, 10 past 2. Okay, so what I'm going to do is I'm going to open it up for 10 minutes for questions. And if everyone remembers what Ping said earlier about questions being to the point, sharp and sweet, and answers being the same, that would be fantastic. So over to you guys. Any questions? None. Oh my goodness. Okay.
This is not that scary.
Thanks, Suji. Thank you for your presentations. Ex-teacher, I don't need a microphone. I work with Garry. I work for Settlement Services International, and we have a program called Ignite, Small Business Startups. So we work with newly arrived refugees who want to start their businesses. Newly arrived, 3 to 4 weeks in Australia. So they have no credit history, they have no language, they have no networks, and they don't understand business. And Garry already has 3 of our clients that he's working with. But I was just going to ask, not particularly the crowdfunding, but the other providers of funding, what are some of the conditions for the loans?
So I think we all do it slightly differently, depending on where our capital's from. But generally speaking, it's an interest. So I just said we all do it slightly differently, but generally they're all interest-bearing loans. They have an interest rate attached to them. As Garry said, there's a commerciality in there. An organisation needs to have a cash flow to be able to repay that loan. Structuring it, we can do different things in how we structure the loan, and all of us will do that in one form or another. We have particular capital sources. At Forresters, we have particular capital sources for 0 to 3 years, so startups or emerging social enterprises in that really early phase. And then we have another pool of capital for the next phase, and for the final phase, if you like, when you're really established. So there's different structures and ways that we can make finance available through those different pools of capital. Are they the sort of terms?
I was just wondering whether you have that commercial interest rate
Yes.
on the loan for all those stages.
We do, yes.
I might add that some of our loans can be 1 year term up to 7 years term. There can be repayment holidays baked in there if it's the right sort of enterprise. So some of our loans, one of them has a 3-year repayment holiday. So, and I'm not sure if I can speak for everyone, but at least for SVA, every loan is an individual, bespoke, custom-made loan. So it's not as if we have a template and fit your enterprise into it. We build the loan around your needs as much as possible.
Yeah, at SEFA we also, try to come up with a very tailored structure, and like Nick said, there is an opportunity to do interest only, or even capitalize the repayment period there. But the thing is that will end at some point, and you will have to be able to repay not, only the interest, but also the principal of the loan. So for example, like a $50,000 working capital loan, I think the term kind of appropriate for that would be maybe 3 to 5 years. Ideally, you can keep it, 3 years. But I think, 5 years at that point for such a small amount, in terms of the risk profile, how we are actually then also refinancing our capital, just to give you an idea. And then the interest rate you would be looking at is somewhere between 10 to 12%. Just to get the numbers out there. So compare that to, a mortgage, fully secured, you're looking at 7 to 8%. I mean, having said that, and I can only speak for SEFA, but given that we've got a different capital structure than mainstream finance, we're actually not, price competitive. Just put it out there. We are not cheap, but we are much more flexible. So you can talk to us about, interest only, etc. We've also got a wide network of funders, so we might be able to come up with a structure that overall really hopefully suits your needs.
Does it answer your question?
Exactly, yes, exactly. Okay.
No, that's all right. Feel free to speak.
Maybe I missed it, but I just wanted to know, are you all government funded, or how do you get your capital to keep, the jobs and stuff going? I mean, Nick, you said you've given 9 loans in the last 24 months, did I get it right? What's the return on that for you guys to keep yourself sustainable? Or?
Sure. So as I said, our social impact fund sits within Social Ventures Australia, which is a much larger not-for-profit. So we're partly funded by a fee-for-service we provide, which is a consulting service. We're also funded via grants, similar to sort of more traditional based charity. And then also through our loans, we essentially cost recovery from a small slither of the interest that we charge to the social enterprises. And so the SVA Social Impact Fund was founded with $4 million from the federal government. That came through the SEFA funds, the Social Enterprise Development Investment Fund, which SEFA, SVA and Forrester, we all got a certain portion from that. And the condition of that funding from government was that it is non-repayable provided that you do what you're meant to do, which is provide loans and equity to social enterprises. But it had to be matched funded from private sources. So we oversubscribed and we took on just over $5 million of private investors' money to match that.
Okay, thank you for that.
Hi, I just have a question. I think anyone could answer this, but for aspiring entrepreneurs who hear from other business leaders that are successful, that there's synergies between enterprises. So for example, what I want to do, if I hear that exists already, so do you think there's opportunity for similar projects to coexist in an environment and share healthy, competition, or do you think that should be a red flag for me? For example, what I'm trying to get at is I'm trying to start something that's called Feel Good. Again, it's very similar to what Erin spoke about, to start some good. And it's looking at crowdfunding to drive social change. So that all of a sudden gave me red flags and like, uh-oh, is this something I should continue to explore? So I guess that's what I wanted to know from yourselves is, do you see synergies for businesses to coexist, or should we look for a point of difference?
Sorry, can I just say I think that's probably a question of doing some market research and sussing out your competition, which is sitting right there at the moment. But I don't know if it's really an appropriate question in this context. So do you mind if I skip that question but allow you to chat a bit later on getting more information about that? Would that be all right?
Just make a statement on that one, Susie.
Yeah, a quick one, maybe a quick second, yes.
One of the things we always talk about is competitive advantage. So, okay, what's your competitive advantage over what exists? What's the portion of your market that you want? Can you peacefully coexist? Do you complement each other, or do you erode each other's value in the marketplace? Once you decide that, you've got your own decision to make. But you've got to remember, we live in a marketplace of 4 million people, or on the web, you've actually got a worldwide marketplace. With what we do, if I'm talking about putting a lawn mowing business into Kununurra, where there's only grass for 3 months of the year, there's only so much market space. If I'm turning it into Western Sydney, there's how many lawn mowers? So it's all about the market space and how much you can penetrate that.
Thanks, Garry.
That's the question I would have.
All right, thank you.
My name's Nick. I'd like to inquire about the crowdfunding. You were talking about people donating. If you got a crowdfunding thing, could you pay back with kind, like product?
Sorry, with what?
With product. Like if you're...
With product?
Yeah, like if you decide, because I saw one entertainer did crowdfunding to make her album, and some of her payment was back in her album given back to people who crowdfunded.
Yeah, absolutely. Absolutely. We've had similar sort of things where people are, crowdfunding to make an album, for example, and so you have different levels of rewards. So you choose from you choose those rewards based on your financial capabilities. You obviously want to make it sustainable for yourself. You don't want to give people back all of the money that you've just raised in prizes. But a product like that is very appropriate. And we also would suggest things like t-shirts or, things that are branded with your logo. Because not only is that something that they have, they can say, this physically tells me that I've done a good thing and I've donated to this campaign, but it also gets your marketing out there. So it's a really good idea, yeah.
I was very curious about that because I wasn't thinking about t-shirts.
Yeah, fantastic. Thanks, Erin.
I have two quick simple questions. One is for Erin. Most of the people that are here don't have communities of people to actually crowdfund from. What does Start Some Good do to be able to help these people be able to create that social network? Because it's easy to get something up and running, but if you don't have hundreds and hundreds of thousands of people who find out about it to donate, then you're not going to reach the tipping point.
Yeah, absolutely. And We have our venture support team, which is always on hand to give advice to different projects. People are different members of the support team are assigned to the projects, and they give advice. Mainly, it is about marketing. A lot of it. It's about deciding who you do have and building that up beforehand. Even we have a lot of resources on our website that give you advice on how to do that. You know, how to create a community beforehand, even if it's just online.
So you're suggesting that people build that community before they start a crowdfunding campaign?
That's definitely a strong indicator of how successful you can be.
Thank you. And Nick, you mentioned investing in social enterprise. Where do you get your exit strategy? If you're investing in a social enterprise, do you look for an outcome where you get a return on investment? And if so, how does that happen?
If I've understood you correctly, are you referring to an equity investment?
An equity investment. If you invested in one of the social enterprises with a normal business, you're looking for an exit strategy. What's the exit strategy for SEFA?
Well, it's like when you make an equity investment in a company, and for an equity investment it has to be a proprietary limited company. It can't be a not-for-profit, but that doesn't mean it's not a social enterprise. Like any sale of a business, they often sell shares in their company or sell the equity, and because we own shares in that company, when the business is then sold to someone else, hopefully for a profit, then we take the share that we invested in.
So really, for anyone who's looking for an investment, they would need to realise that there's an exit strategy for the investors, and it's not something that can run for 15, 20, 30 years without the investors wanting to get out.
That's right. We tend to try and go in there with some sort of hypothesis or idea of who would be likely to buy this business, and is it of any interest to anyone beyond the current owner. So you're right, it's something that we look at as we enter the business.
Okay, thanks everyone. Again, I think I went over time, but it's getting too exciting and interesting. Okay. Right, so thank you so much to the finance panel. Brilliant job, well done.